900 points. The market went down 900 points today. Man, and it was relentless selling. Unlike some of the stuff that we've seen in the past where it was just like flush. Like when we were talking about Brexit or the election, it was just like roll over flush, panic down, and snap right back. This thing for the last couple of days has just been methodical. And what I mean by that is just step-by-step selling. Every single bounce is being sold off. Every move to the upside is being stuffed. And I know for a lot of you, this might be the first time you're going through this, or you forgot about how it was the last time you went through it. And it's normal to have a heightened sense of awareness about your positions, especially when you're looking at your portfolio in something like this. So I'm going to try to talk you through this. We'll talk about a couple of bounce zones in today's market mutterings. So let me give you the official welcome to Stock Market Mutterings for the 10th of October. Now, I think before I get into that, about the market, possible bounce zones and things that we're going to be looking at for tomorrow, because this could turn out to be, in hindsight, a wonderful opportunity to really bag some serious money. But for us for trading today, I have to say we dodged about every single cannonball possible. If you look there on the sheet, I had two stocks I traded. I traded LULU today and then mainly Netflix. And I don't think I could have hit this Netflix any better than I did. Now, I know that maybe some of you are watching this for the first time. Most of you are probably repeat watchers and have an idea of what kind of strategies I use. I cannot stand shorting in the hole. Now, I have nothing against people that do. I know traders personally that do very well with that type of a strategy. For me, I'm not ashamed to admit it. Like I've said so many times in so many of my whiteboards and other types of videos, every time I know what my strengths and weaknesses are, and that's a weakness of me when I'm shorting into the hole. Now, what that is, for those that might not understand that expression, that's bear flag shorting down at low of day after a stock has already made a move. I prefer if a stock goes down to low and then bounces. If I feel that it's weak, I like to short it, or I like to short stuff as a counter trend trader when it's going straight vertical and the RSI gets high, but that's a different topic. I'm just not a fan of that because my track record says I shouldn't be a fan of it. I just not have had success with it. So in a situation like this, when the market is really, if you followed some of these mutterings recently, I've been talking about range. When these stocks get to the lower part of range, I keep thinking in the back of my mind, look, a snapback rally is imminent. At some point, we're going to get this. Is it going to be now? Is it going to be when I do that? And these stocks like Baba, Netflix, NVDA, they could snap back on you $2, $3 and then turn around and go green. Now, that has not happened over the last couple of days. So that thinking in theory has been a hindrance to me because I haven't taken advantage of any of them. So what I did here early was I was just looking for some point like we did yesterday. I was looking to just counter move Netflix from the open, just try to take advantage of some of these that were going down. And we got into this thing right at the perfect moment. You can see it right there. And on both of these trades that I did, I just took partials. But let me just try to explain to you what I'm seeing here so you guys understand what we're talking about. The first level that we were at was around the 341s. Now, the reason that, again, when I say counter trend trading, just because something is up a lot or down a lot doesn't mean that makes it a good counter trade. It helps to have that range, but the next thing you need to look at is numbers like support, resistance, what levels are we at and what areas. If you look a little deeper, take a look at the bottom chart. If you look at this 341 area, I'm going to just kind of highlight it right here in the upper chart, or draw a line across it. This little 341 area, if you look back here on the daily chart, just around 341s, you're going to start seeing that was around the closing price and pretty close to the support lows on the 5th of September. So that's the last time, you'll see here, I'll just draw it on the bottom chart, so you'll see around that 341. And you had a couple of tests of that on the 7th, the 6th, the 7th, and the 8th. So you had a few tests of that area. So around 340 was an important number. Now, I don't have to be the first one at the table. I don't have to be the perfect price every time. But I went in here on the first green, right here, this 705 green. I went right in here, just started in with a position, and I left myself a little bit of room just in case it rotated lower. Now, once it bounced in this kind of market, because I don't know if the move that I'm getting into right now is going to go green, which is what I've been trying for 2 days, is get into these on the lows. They go back to green and then tack on 3 or 4. I'm looking for this epic rally. Well, that's 2 days in a row. It hasn't happened. So I've taken, if you'll look at the timing and sales there, my brokerage there that I posted at the beginning, I decided to sell a piece and then move my stop up. And then I turned around and I did the same trade again. Well, let me go back to the first trade. The first trade, yeah, I made some money on it. It was a really nice trade, but it was not able to follow through, and I end up stopping out on the second piece. Then it rotates and makes another low, so I start looking yet again, and we got down in here where we didn't have daily support to go from. We were just a little ways off of that and other daily moving averages. And then we just started, if you look at this 5-minute chart here on this 8:25 time, again, these are Pacific, 8:25, 8:30, and 8:35. You'll see you got some wicks there. Let me try to open it up so everyone can really take a good look at that. So you got some wicks right here providing some support. So as soon as this thing started to lift up here on this green, that's a decent trade for me. Now, it's not a tier 1 by any means, but those are the kind I look for. You got a definite risk area, stop at low of day, and see if maybe we can get that move again. Now, that turned out to be another good trade, but still, there was no follow through. So after the second time of trying this, I started to get very concerned about, are we even going to get any follow through? Because it's not happening. And obviously it didn't. You had one more run there later in the day, but after that, it was all selling. And this is what we continued to see. Again, you have to ask yourself sometimes when you're trading, the common sense has to take over. And the clues were there for us, was saying, look, you know, we're trying for this mega bounce. We're getting some bounces and the trades are looking pretty good, but we're not going to hit that home run out of these trades today. Man, I shouldn't even use the word home run. I hate that. Just really looking for bagging a nice one, that red-green move. I don't think we're going to get that today. It just continues to be sold. Now, I did take a little bit of LULU here for a swing trade, kind of the same thought. We got down into some levels, and I'm a little tiny bit underwater on that, but I have a very small position. That doesn't mean I'm making an excuse for it, but I wanted to put a little bit of money to work in this environment, but I have the funds to do something like that. So let's go back, because you know, it was another green day. The way this thing was, and taking pretty much all longs today. Yeah, I got to be happy with that. Again, I love shorting. Shorting is like my favorite thing to do, but I don't like shorting when things are already down $7 and $8 a share. So let's talk about what's probably on a lot of people's mind. What are we going to see here? Like, what's going to happen? And you know, I don't know what is going to happen, but I have to think. I want to really, really focus on this bottom chart here. Let me pull it back just a little bit. If you remember, back in February and March and April, the whole thing back then was that 200 moving day average. So if you take a look back here, it might be blocked by, I'm going to try to scoot it over here, and I'm going to move it up, because my webcam might be overthrowing it. So I think you should be able to see that. This is January, and again, this is a little bit steep because I have the chart stretched out, making it look a lot steeper. But this did the same thing. It was all just ramp, bull market, and then you start rotating lower for a couple days, and then the monster flush comes down, and the market tags the 200-day. That's this teal line I have on my chart. Then the market makes this panic bounce, and then it retests that 200 again here on the 4th of April back in this area. And then again back on the 7th. Now, a couple times it did close under the 200, but for the most part, it held off that. And here's a little bit longer view of that. Hopefully you'll be able to see that. Someone move this chart back down. Now, what this means is the 200 has been a pretty good spot for this thing the entire year, about where it may land or where a bounce thing. So I'm looking at it now after hours. You're down a little bit more. The 200 moving average is only a few pennies off of here. I mean, we're talking about 270. I don't know what the exact number is. 276.30. So you're sitting there right now after hours here at 270, 276.80s. So I mean, you're really, really close to that. So I think if you're going to see a bounce, that's where you're going to see this, is that 200 moving average. And I think it needs to hit that now anyway. You're too close not to. Underneath of that, you really don't have anything left till you get down to about 268. But I do think in this scenario, there'll be some sort of panic bounce prior to 268. Now, when I say panic bounce, I'm not saying that we're going to go back to 290 all-time highs. Maybe. But I wouldn't say. I would just deal with one day at a time that you'll probably get some sort of quick bounce off of that. So what does this mean? I think if you're looking at it right now and you're looking for max value and you say to yourself from a trader's viewpoint, what would be the best case scenario to knock the shit out of this market tomorrow? I mean, just put the premium on the board and have one of those big, 5-figure days. Get me down into 275. Flush me open early. I mean, gap this down, get rid of everyone, shake them all out, and just start picking them up. Because, I mean, you're looking at serious value on a lot of this stuff here. I mean, NVDA still going down here. It's already on its 200-day moving average as it sits. You got big support down around 237s and 233. So you're just one good flush away from these. Netflix here, you've got monstrous support going back from August at 307. So, I mean, 20 bucks sounds like it's a long distance away, but hell, it went down 30 today. So I think if you start looking at these charts, and don't just randomly say, look, I'm going to just, it flushes, I'm just going to start buying everything. Go through a series of charts and start looking for back support. The further that you can go back into time and you can start pulling from moving averages, I think you're going to see a lot of these approach their 200-day moving average. And then you're going to see maybe longer areas of support where this thing has held support. Maybe it was a year ago or 6 months ago, something really long in the past. I think if you see those stocks trade down into those levels, it doesn't have to hit it to the penny, but I think if you start trading down into those levels, then yeah, you've got an opportunity to make a really nice reversal trade. As I said, we've been trying this for 2 days. It hasn't worked. Maybe it doesn't work for a third, but I would imagine from now until Friday that you're going to see a stickable follow-through rally attempt. And I'm not saying that we're going to go, back to all-time highs or that's going to cure the market's problems from here. It's going to take some time. Once you get shaken down this much, there's going to be a lot of volatility. It's going to probably be very much of a repeat of February. You're going to go back and forth for about another month or 2 months of this kind of stuff. I doubt it comes right back and snaps back and goes back to the old market that you experienced a week and a half ago. But look for those, because that's where the value, I think, is right now in this market and where these trades will be and how you're going to make some good coinage. And that's what we're looking for, because you don't always get opportunities, I think, like this. They may not work, but you don't really get opportunities like that. Now, on the flip side of this, a lot of people ask me in these situations, what do I do? Okay, I need to protect my account. How do I manage my way through this? And you've got a couple of options to you. And I'm appealing to new people and people that don't have a lot of experience trading, or maybe some experienced traders that are struggling. You don't have to trade through this. Now, that's maybe not always the best idea, because if you're trying to do this for a living and you depend on trading as an income, your mortgage company or your car payment company doesn't give a damn if the market's going down, or you don't feel like trading, or you want to sit on your hands and be in cash. They want their money. So if you're in the need, you have to trade, then you have to trade. On that note, I think in a situation like this, you need to be conservative with your position size. Remember, I say that all the time. I know it's like a broken record, but the secret to being able to stay in these positions and being able to go through these back and forth is position size. Right? That's like the throttle on your vehicle, right? The gas pedal. You want to go fast, you put it down to the floor. If you don't, you just slightly tap it, right? You can either go 20 miles an hour or you can go as fast as the car will go, 100, 150 miles an hour, or whatever kind of car you got. So you don't have to trade aggressively. Just wait for these moments. So I'm kind of saying right now, the ideal scenario here would be gap down and just get yourself a game plan together tonight. I don't have to give you a bunch of stocks. I'm listening to Netflix, NVIDIA, Apple, LULU, Baba. I mean, all of these things are way oversold on a technical basis, but that doesn't mean it can't get more oversold, okay? Remember that. It can get a lot more oversold. So pick your areas where you're willing to do business on the chart. Get your orders ready, get your game plan ready, and see if tomorrow that happens, you get that gap down, and then we have some nice areas to see for some reversals. Now, let's say the flip side happens. It's an overnight gap up. The last thing I would do in this case is chase an opening morning gap up. I think if a gap up goes, if you find something really nice with a tight piece of consolidation that can help you control your risk, go for it. But other than that, you can't be mesmerized by green bars. And I think a lot of people have been doing that over there. Oh, green bar, smack long. Green bar, smack long. And the next thing you know, it's gone on the next bar. I don't think you can green bar chase. You can't green bar chase. It's not even a good idea in a real bullish market. It's a nightmare. And I think some people have experienced that. This stuff can change on you real fast. So remember, a lot of people sell these positions on the green. Don't chase green. Give it a 30, 40 minutes at the open. Let these charts develop. Let them build. Let them get some consolidation. Let them bounce off of some areas. You'll see it. Because one of the things I always tell the people in the room as well, something for you to keep in mind, is when stuff is down this much, you don't have to freaking bottom ticket, right? I mean, you don't have to be the first one in here proving that you're a hero and get the exact bottom. I mean, damn, Netflix is down like $60 in a week, right? If you're just trying to get $2 or $3 on a bounce, wait, you got plenty of room for a bounce. I mean, you can wait for a lot of this panic to subside, wait for these levels to set up, and then just pick your shots. But make sure you do that tonight. Get a good list out, because some of this stuff might happen real quick and you don't want to miss it. But get yourself a game plan together. Start putting a shopping list of stuff that you want and that you're looking at certain levels, and just be ready for it. And I say, if we do gap up, on the other hand, no way do I do any flag breakouts or bullish breakout buying on the first move in the morning. You're going to have to give me about an hour's worth of solid market data, you know, some higher lows or something like that to work off of before I can say, okay, we're ready to sustain a rally. So I'll leave it at that. I think I've talked enough. I hope you guys are doing well. I know some of you are going through really, maybe seeing this for the first time is kind of freaky. If you need help, visit the linkenlist.com. Click on the trade room tab. You can start trading with us right away. Do my best to walk you through this kind of stuff and show you how you can actually make money. Again, another green day for us. So that's like 7 out of the 8 so far this month. And all things considered, got to be happy with that. So until tomorrow's muttering, we'll see how things go. As always, feel free to reach out to me at support@thelinkenlist.com if you have questions. Take care and trade well.